Morning, everybody. It's Thursday, March 28th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments or would like to chime in on anything we're visiting about, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Quickly here, overnight markets had May corn up a penny at 427 3/4. May soybeans were down 4.5 at 11.88, and May Chicago wheat was up 3/4 at 5.48 1/4. This morning's export sales report was solid for corn again this week, a little over 1.2 million for 23 and an additional 126,400 for 24. Upper end of the estimates, we're looking for 1.3. So as I mentioned, corn sales keep trucking along here. Soybeans, disappointing. Low end of the estimates, 263,900 for 23, 120,000 for 24. They were looking on the low end for 300. So once again, a disappointing week on the soybean complex. Wheat was solid, better than expected, 339,600 for 23, 212,800 for 24. And meal came in at 127,300, which was in line with estimates. Good morning, fellas. Big day today. I was talking this morning with a couple of guys. It sort of, in my mind, signifies the beginning of spring when you get the planning intentions report. It gives us a roadmap for the next, couple of months at least as we go into planting, and gives us some things to talk about. Obviously, we'll also get a really important stocks update. I know Dustin's been talking about that for the better part of the last couple of days here. So we'll kick it over to Dustin here this morning to start. I know he's got some comments on export sales. We'll reiterate a couple of thoughts on what we see here coming out at 11 o'clock Central and throw it around the room. So good morning, Dustin.
Morning, Dan. Yeah, big day for reports. So we'll all be smarter after 11 o'clock this morning on, two new pieces of data as quarterly stocks, something that we definitely rely on USDA to count for us on a survey. That's the proverbial boots on the ground, something that I think the private market does have a hard time estimating. And then the acreage report, which we've had pretty wide guesses for both of those going into this. Just a couple of just real big cliff notes. Corn supplies are already going to be abundant. I think a lot of people know this. We've had decent demand, so there's still a bid for this year, both on the ethanol side and obviously exports. Mexico continues to buy, even though China's been fairly absent from what all the early estimates over the last couple of years have been calling for from China. Hasn't been there. So on the flip side, bean export demand has been fairly poor against record domestic demand. And so I think that's going to be where the bigger question comes for us, is where bean stocks come in at. That one is not abundant. We're talking, easily in this report could give or take going above or below 300 million bushel carryout this year. And the difference of scraping the bin or not come July and August. So we still have July no spreads inverted. That's, I think, one thing to note going into this is the market is still telling us something, even though they've come off of their inversions from 4 or 5 months ago. They're still inverted right now, whereas corn spreads are quite wide compared to historical terms. So that is I had a customer actually talk about an article written Farm Futures Magazine about the spreads here yesterday. And, I think it is something to keep note of, is what are spreads telling us about the market? They are still pointing towards a fairly tight bean market carry out. But there's no reason that, 86, 87 million bean acres can't resupply us at trendline yields. So we're still thinking about what that means for grower risk. And I think that's for this audience, which is primarily growers. We still think that beans are something to be especially, vigilant on what type of risks you're taking in relation to what you have for crop insurance, what you have for farm bill, fallback plan. I think beans are where our focus is right now.
Are we seeing an uptick in volatility here the last couple of sessions? You guys noticed?
Not noticeably. I mean, you see, like, a lot of times volatility remains fairly strong in the week leading up to the report. That's, I think, there's a lot of anxiety obviously around this report. So retail, people that are actually holding these commodities like growers and buyers, they tend to want to go get security going around this report. And we see a lot of option purchasing, at least keeps volatility supportive coming into it, but not extremely noticeable. I mean, the last time we had an abundant stocks count going into a report like this was 2020, and we had a very mediocre response out of the report. So I don't. I think the market may be planning on the fact that you get past this, and it might not be as big of a deal as the anxiety warrants.
Yeah, I was, I didn't have time this morning to totally corroborate this, but I don't know if you guys saw, there was a Bloomberg article also out yesterday that, I'll paraphrase, but just highlighted the fact that with, the push for green energy and sort of this, this rush to EV cars and stuff, that there's a pathway for soybeans to become America's #1 crop was the generalization of the article. And it referenced that in the last 100 years, and like I said, I didn't have time to corroborate this, but 83 and 18 were the last time that bean plantings were above corn plantings. So I thought that was interesting as I looked at that this morning. And, Ben, I'll throw your little more senior group of the group. What's your thoughts on that?
Man.
I'm going to take my call from AARP, Dan, if you can hold for a second.
Yeah, keep you honest.
Yeah, I had the pleasure to attend a couple conferences here, and those conversations have been coming up that they believe that some of the pretty smart guys think that we will see a move to more acres of beans, over the next 5 to 7 years. And, so especially on days of report, it's hard to look past Monday. So sometimes we get ahead of ourselves. We started in the last couple of years getting a big talk about the expansion and crush. And I think we're in a transitionary phase right now of how this all starts to work. And to Dustin's point, watching these spreads for the near term, for the year, maybe two that we're really considering, and primarily on the 24 crop, we can easily resupply quickly with the right acreage mix. And, it would lend itself to we're headed in that direction. But there are some positive things for corn when you look at the expansion of ethanol and aviation fuel, potential exports. We've had a lot of foreign countries show an inclination to going towards a heavier ethanol use in their fuel supply, but they've been very slow to be able to implement it, whether it's from capital to build plants or to have readily available supply. We mentioned before that a place like China that is an importer of corn is going to have a very difficult time instituting any sort of an ethanol program until they have ample supplies. The basics of a plant is it's $250,000 every time that you have to shut down for no supply. And that's just, it's not a feasible play until you can secure your stocks to run the plant. But yeah, I think that in time that happens. People probably don't like that. I'm sure people don't agree with it, but everything remaining the same, it's probably the direction that we're headed with, continued government moves towards greener energy, and it's coming. It probably just won't be super fast. And then today we'll have a humongous bean number and I'll have to eat crow, but I would say, Dan, that it happens eventually. My bias towards report is always to have a lot of humility, right? We can talk about all these numbers. We can talk about the different planning things. In following the number, we can still do some changes to that. So the June number is the one that will be the concrete, end all be all of this, I think.
Yeah,
well,
absolutely.
Correct me if I'm wrong, Ben. I mean, and Dustin, you see volatility drop after the report, right? I mean, as Ben, you being in the wheat option pit, like normally you see volatility drop in premium usually.
Yep. I mean, outside of, some of your outlier reports where you have really big movements, but typically, bean vol is still very cheap relative to corn. I know Dustin has mentioned that multiple times in the commentaries.
Right.
So I don't know how much bean vol will come off. Corn vol elevated to soybeans. If you have a move that's 5 to 8, 5 to 10 cents either way, I would expect vol to come off, especially in corn. We've seen on rallies a really aggressive seller of soybean calls pretty consistently up above 1205, 1210. They've come in and peppered the market pretty hard. So, I would say that if we, for some reason, we have a move where we get a really strong bean move higher, it's you can look at some strategies that work around protection in a low vol environment. And corn call slips have been very strong. That's lent itself to some better structured prices. So yeah, it just depends on where the trade's at and where the pain points are at for the people who are holding the risk. But yes, following a report, you will see, outside of a huge move, typically vol will come off. I do think that the people that are holding the bag and beans on the downside tend to be short puts. We see a little bit of a firming up sometimes when we have these big declines. So it really just depends on the people that are willing to take the other side of the risk, how they're sitting, because if they're loaded up one way, they have to back up in order to take more on, right? That's a general guideline of a market maker. So
right. That makes sense.
Well, Dust, what if you pulled out your crystal ball, where's the biggest surprise that you're looking at for today in the report? What's the number you're really keyed in on? I mean, we know plannings are going to be what they're going to be, and they're going to change by June. But what is your focal point?
Well, I think just as a percentage of stocks movement would be bean stocks, right? If you have a 50 million bushel swing in bean stocks, that's a bigger deal than 100 million bushel swing in corn stocks by a long shot, I think. So, yeah, bean stocks for sure. And going through the balance sheet, if we're just projecting USDA outlook forum trendline yields, you can make the balance sheet abundant even at a 86 million acreage bean number. I think that the shock and awe would be maybe to the downside on beans if there was a stocks move higher, because your percentage of carry out or carry in from 23 to 24 goes up quickly. So if you were to see a surprise stocks higher in beans and also an elevated bean acreage number, because the private estimates seem to think that we're moving back toward corn acres, not toward bean acres from the outlook forum. If you were to see both of those, then I think you could see a drop in the ratio, right, where beans drop faster than corn does. I don't know it would necessarily be super bullish corn, more it would be bearish beans, and I think that might be the bigger concern that we would have is if you got two nails in that coffin, higher bean stocks and higher bean acres, that would be the surprise. I'm not calling for that. That's not what I'm suggesting is going to happen, but I'm just saying that would be maybe the biggest mover if we saw those two things happen.
Yeah, I would agree with that. I think that the worst case scenario for the trade is a really bearish bean outlook, and it just kind of becomes a weight and drags on corn, and it really disrupts people's margins. So yeah, I think that you're spot on with that.
Well, very good. Well, we're going to know here in a little bit, guys. It's an exciting day. Rylan, we got a minute and a half, couple minutes here coming into the open. What last day of the week here? What do you got for livestock?
Yeah, well, all eyes on the hog and pig report today. So I think the expectation is pretty sizable drop in breeding herd right now. So the trade was pretty good. We're still kind of creeping back up to contract highs. It's getting closer here in the June. It just seems like seasonally it's going to be hard to really kind of back this thing off without some kind of big supply news that the market just wasn't expecting right now. But cattle's already kind of taken it on the chin pretty hard here over this past week, but slowed down yesterday. So, we've seen some lower cash prices. It looks like cash is likely to finish up maybe a little bit weaker for this week. I think that's the expectation. We're trying to cram 5 days into 4 here. So Packers are trying to scramble, I think, to take care of, at least capitalize on this move here on the board like we've been suggesting. But I think the bigger risk right now is going to be in feeders today, just watching what happens in corn as well. If we get really big reaction here up or down, feeders could follow in suit pretty good. So just something to watch today, but otherwise it just seems like we're kind of limping into this long holiday weekend. The trend and momentum has been kind of lower in the cattle market and definitely higher in the hogs. So I think that trend likely to continue into next week unless we see something really different on some of these reports here.
Perfect. Appreciate that, buddy.
Thanks.
We just came into the open here. We got May corn up a half right now, 427.25. May soybeans down 4 1/4 at 11.88 1/4, and May Chicago wheat down 1 1/4 at 5.46 1/4. A couple of administrative items. I know we've referenced it a couple of times. Markets will be closed on Friday in observation of Good Friday. We will reopen Sunday night at 7 o'clock Central. And as you see at the bottom of the screen, we will be having a bonus AgYield War Room here later this morning, 11:10 Central Time. We'll have our reactions and comments on today's prospective plannings and stocks report. So be sure to tune in. And as always, every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate everybody tuning in this morning. We'll talk to you here in a little bit once we see the report. And if we don't, everybody have a great day, have a great weekend, and we'll talk to you soon. Thanks so much.
Thanks, Dan.